Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is Lawrence Lepard. He is an investment manager, sound money advocate, and a gold stock fund manager. Lawrence, it's great to see you.
Hey, very nice to see you guys. I think it might be the first time I've been with you. I'm happy to be here.
Yeah, it's your first time and it's an absolute pleasure. Lawrence, you made a tweet last week saying, I straddle two worlds and love them both, gold bugs and Bitcoiners. What about the silver world? Where does that rank on your scale?
Yeah, I should have said three worlds: gold, silver, and Bitcoin. I mean, I kind of put gold and silver in the same bucket. Silver is just gold's volatile little brother. And I love silver. I absolutely love it. In fact, some ways I like it more than gold because when it moves faster.
Yeah.
But it's also got some great ESG uses, and there's not a big stock out there. So when the world gets tight for silver, as we all know, the price really zooms much more quickly than gold. And in my fund, I've got silver and gold, but I'd say the silver weighting is maybe of the precious metals bucket. I'd say the silver weighting is probably half. Mm-hmm. So I love silver. Absolutely.
Are there any specific silver stocks that you feel strongly about that you talk about publicly, or is your
I'd be happy to drop a few names. I mean, there are many good ones out there, and as you know, a lot of companies are not pure silver. It's hard to find pure silver, but I really like Guanajuato silver. I'm sure you guys have talked to James Anderson. What he's done, he's done a lot in a short period of time.
Yeah.
I really like Arcana, which is just in the process of starting to pour silver. I like Alexco is another favorite. Some others that are partly silver. I like Fortuna Silver Mines a lot. It's not all silver. I like Hochschild silver a lot. It's silly cheap, really, really cheap. I love Hochschild.
Do you lean towards the big producers or the junior producers or the exploration? And where does
That's a great question, Jim. I mean, I kind of move around based on what seems to be the best value at the time, right? I mean, sometimes the drill stories are really cheap, and I'm buying drill stories because they're great value. I mean, one of the drill stories I like a lot is BlackRock. I have a big position there. Sumo, which is right next to it. But sometimes the drill stories are more expensive. Today, in my opinion, the deepest value is in some of the producers. I mean, let me just use Hochschild as an example. I mean, the company's got a $1 billion market cap, and arguably 250, 300 million a year of EBITDA, free cash flow. So a little over 3 times free cash flow in a really well-run company. I love it. I mean, that's just so silly cheap. As we all know, at the peak of bull markets and these things, they can trade at 10 times cash flow, or more. Mm-hmm. So I think there's a lot of multiple expansion upside there. Those are the obvious silver ones that come to name. I'll take a look at my list, and some others will probably pop to mind, and somebody's going to be mad at me for forgetting them. But but those are. I mean, I love Guanajuato. I think Jim is. I think Jim is brilliant.
That was pretty amazing how quickly he took that one from, just a concept to production last week. I mean, and it's ridiculous that it's still only $100 million stock.
Well, that's right.
And they're on the verge of producing 2 million ounces a year.
Yeah. I mean, I like Avino a lot. I have a very big position in Avino. Really like it.
I love it. We're getting your whole
yeah, well, I'll try. I like Discovery Silver a lot. Really big position there. Really like it. Let's just give you other names that I'm really high on. I obviously own some First Majestic. Extremely well run. Not quite as cheap as the others, but gotta own some of that if you're in the silver game.
One of the things that's prime in everyone's mind right now is what the Fed's going to do. Whether we can all debate whether or not how seriously we should take the Fed. But of course, we love to talk about it. So the taper, they're talking about the taper coming up. Do you think it's a bluff? I mean, do you think they can really seriously taper after going for so many decades, or since the financial crisis?
That's a great question, Jim. And I'm not smart enough to know the answer. I don't think any of us know the answer. I mean, these guys are the masters of kind of moving the peas and shells around. I mean, they may actually be able to taper, but I think Luke Gromen put it best. I mean, okay, so they're gonna take off the IV in one arm, and they're gonna start injecting money through swap lines and other things on the other arm. I mean, is it a real taper or is it a fake taper? I guess is the point I'm trying to make. And I think that one thing we know, at least I believe with fairly high certainty, is that the system as currently constructed needs to have a continual, heroin feed to keep it growing or keep it from collapsing. And so even, whether they taper right away or whether they delay the taper, whatever it might be, I think one thing that's likely to happen is that eventually there's going to be a problem. Because if they're not feeding enough money into the system, mathematically, the system will not continue to operate. And so, what I would conclude is that even if they do taper for a short period of time to try and tamp down the obviously raging inflation that we have, I don't think it can last for long. And so, what I've said is I kind of view the Fed as like these guys driving this clown car and they're bouncing off the guardrails. I mean, they go in one direction. Oh no, we're tight. We're deflation. There's no inflation here. But then, you watch once things start to break, once the market starts to tank, once, the bond market starts to fall apart, once you have trouble, they're going to come back in because they have to, or they won't. I mean, there's some possibility they won't, but if they don't, it's going to look like the 1930s. We're going to have a downturn to beat all downturns. So it's very, very hard to know what these people are going to do. And they're, like I say, they're very good at moving peas and shells. I mean, they're trying to get us to think they're going to taper. They're trying to get us to think they're responsible with respect to inflation, but they really can't be because they are colossally trapped. They're in a system that has to grow the money supply, and yet that's leading to inflation, and the inflation is becoming obvious to everybody.
Well, George Gammon had a great analogy. I think he referred to it, the economy with the Fed as a heroin addict.
Right.
Once you withdraw the drugs, the heroin from the addict, they go into a shock.
Right.
Their system starts shutting down. And the chart that I just had on the screen showed collectively all of the here, I'll share it again real quick. All of the
it's a great chart.
This is the Bank of England, the Bank of Japan, ECB, and the Fed collectively. What we've done since Lehman declared bankruptcy,
right,
has been required just to keep the train on the rails here.
Right.
And I don't know. I don't see this ending without massive consequences. I don't think it's gonna. It doesn't seem like possible that it could be a smooth landing to me. I don't know. Maybe I'm just naive. Maybe I don't know enough.
No, I mean, I think it's really pretty just basic math. I like to say, and I stole this from somebody else. I can't remember who, but you just can't taper a Ponzi, right? I mean, they gotta keep it growing. I mean, in a Keynesian system based on debt, and debt's what fuels growth, you can't stop growing the debt, or else the existing debt outstanding implodes on itself and is extremely deflationary. I mean, there's an underlying current of enormous deflation in all this debt. I mean, debt is just pulling consumer demand forward. But the flip of that is that, as Chairman Bernanke so accurately said in his famous, speech, we have a printing press. Mm-hmm. And therefore we conclude that deflation can never happen here, and we will not allow it to happen here.
Yeah.
And that has been the Fed mantra ever since that speech, and I take them at their word. I think they will have to continue to print.
Yeah, I think I agree with you there. That leads into the China question.
Sure.
China's got this Evergrande, and not just Evergrande. I've heard several others have defaulted too. Fantasia, Cynic, a few others.
Yeah.
Sort of. Is this? Do you see this as a major issue, or
well, this is certainly a crack in the. I mean, we're in an everything bubble, right? And arguably, this is one of the. And I think the everything bubble is kind of starting to waver. That the upward momentum is slowing down. I mean, Michael Oliver's documented that, and others. And so, this is one of those cracks in the bubble. And by the way, China's in the same boat we're at in terms of debt growth and leverage, arguably even larger in some ways. So, Evergrande getting into trouble and falling real estate prices in China as a result of, that bubble bursting would be, an enormous deflationary negative thing for their economy. Now, what I understand is that the CCP is going to bail this out. And if the Western financial community doesn't have a lot of Evergrande paper, then this isn't Lehman Brothers. This is just something that the CCP will give them the money, and they'll try and sweep this all under the rug. But having said that, it's still a sign that the bubble is starting to waver. I mean, the way I look at things, the way they are today, it feels, I was around in 2000, I was in the investment business, and I was managing a fund that had a lot of internet investments. Of course, we were trying to sell everything we could. And because, my partner and I looked at each other and said, we must be the last two guys in America that think a company is worth its future discounted cash flows, because nobody had any cash flow. Everything was being valued on eyeballs. And I got to say that, the market, the stock market today, particularly the triple Qs, kind of feels the same way. Now, that doesn't mean, I got my timing right. I mean, I feel like it's March 2000. Who knows? It could be 1999 or something. But it does feel like we're getting to the peak of insanity. I mean, you're seeing just so many crazy things, the NFTs, and there's a lot of Dogecoin, and all these things are just they're really very, very indicative of huge speculative excess based on credit creation. So, whether it bursts today or whether it's 6 months from today, I don't think it's 6 years from today. I don't think it's even a year from today. I think it's definitely within the next year. There's going to be a comeuppance for this market, and of course, the response to that will be very similar to the response in 2008, or in March of 2020, which is whatever it takes. We're not going to let the U.S. government lose its ability to fund itself. And if people forget this, but in March of 2020, the U.S. bond market went discontinuous, and there was no bid. Very briefly, and when Powell came in, he more or less said, he took the Draghi playbook, said, whatever it takes, we're going to solve this. And gold was up $200. It was up $100 2 days in a row coming out of that. And right now, I think the gold price and the market, is saying, well, okay, maybe it is transitory, maybe it'll come down. Gold worked great, but the COVID stuff will go away. Of course, you and I don't believe that, but they do. And therefore, gold's under control. I think once it becomes clear that transitory stuff is not true, and that inflation is persistent, and that they cannot taper, then they're going to be loosening into a hot inflation environment. And inflation's only going to get worse, and gold's going to go bananas. I mean, we're going to make money with childlike ease. It's going to be really great.
Well, I know you follow and talk to Willem Middelkoop, and
he's great.
I keep pronouncing that wrong. It's Middelkoop. Someone criticized me in the comments. I got to get that right. Middelkoop. But one of his comments was, if you're not in it, it's almost too late. Once it goes, it just goes, and you have to have your position already established in all these names beforehand.
I think that's right. I mean, there aren't going to be a lot of do-overs. I mean, you'd be able to chase it for a little while, but there was also a great comment on Twitter that I saw by a friend of another, which said, gold may only reset once in our lifetimes, but once might be enough, or once will be enough. And what if we woke up and the Chinese had decided to back the yuan with gold, or what if gold got revalued at 5,000 or 10,000? I mean, all the stocks we're in would be up 10x from where they are today. And so if we really get a cascading monetary failure event, you're going to have to move quickly. And if you're not there will not be a do-over. So I think he makes a very good point, which I agree with. You've got to be there a little bit in front of it. Because it'll be hard to chase it.
Another person who I know you follow and talk to is Tavi Costa.
Oh yeah, he's great too.
You were just commenting about discounted cash flow for which sectors, and Tavi had a recent graph that I want to share, and you've probably seen this, but if gold and silver miners were a sector, just their free cash flow yield by sector, they're pretty much one of the better bets right now. Is this one of the reasons you're so heavily invested in this?
Yeah. I mean, yes, it is. I mean, the miners have really cleaned up their act, and in spite of the fact that gold was at 2050 last summer and is now at call it 1,800 plus or minus $50. I was at these gold shows recently in September, and what the miners were saying is, our stock's not doing very well, but boy, we're doing great, because the ASICs, as are 1,000, 1,100. I mean, when you're selling your product for 1,800 and it costs the producers 1,000, that's a hell of a profit margin. So, the miners are very, very healthy. Their balance sheets are clean. They're throwing off cash. In many cases, they're growing production. They're replacing the reserves, et cetera, et cetera. So it's good. The fundamentals in the industry look extremely good, probably as good as I can ever remember. And then what's odd about it, Jim, to go with that is that, the stock prices don't reflect it.
Yeah.
So that's where, okay, if the fundamentals were good and the stocks were zooming and they were pricey, well, that would be one thing. But in turn, the stock prices have pulled back very severely from where they were last summer. And, if you do these multiples, as I mentioned, like with Hochschild as an example, paying 3 times cash flow for something is a very, that's a very good price.
Well, the ones that have, the junior, some of the majors that I'm invested a little bit in, Kinross and
Sure, good company.
When I bought it back in, I bought it when it was below 3 back in March of 2020 when it was crashing, and I thought that was just stupid. But since then, I thought it was stupid that it would fall below 3. But since then, just as one example, they've added a dividend now that they didn't when I first bought it. They're now doing share buybacks of 5% of their outstanding stock. It's just and what else should they do? I mean, if the market's not going to value them, start using all that cash flow to buy back the shares, reduce the share.
Well, that's absolutely right. Yeah, that's absolutely right. And as they generate this cash, I mean, I'm going to try, in the companies I'm involved with, I'm going to try and push them to not hold cash in the form of cash, but hold gold as cash. I mean, they can take a playbook from Michael Saylor, what he's doing with Bitcoin.
Yeah.
I mean, it's why not just put the gold on your balance sheet?
Or Endeavor and First Majestic have done that in the recent quarter. They
it's brilliant.
Withheld some couple million ounces from the market, which
it's brilliant in my mind. I mean, you've got a fabulous asset that's going to appreciate, very nicely in the next 5 years. Why sell it?
Yeah, Lawrence, Treasury Secretary Yellen says spending bills will be anti-inflationary.
Yeah. Boy, oh boy.
I know it, and will lower important costs. So what do you have to say about that?
I mean, I saw that, and I think I tweeted out, it's like, I can't take it anymore. It's like, talk about gaslighting the American public. I mean,
yeah,
and I mean, maintaining their credibility is part of their job, and statements like that. I mean, there's just absolutely no way that one can get, from we're going to spend more money and that's going to, lower inflation. I mean, I don't know what mental gymnastics she went through to do that. And only an academic completely removed from reality, could make such a statement that's so logically wrong and obviously logically wrong.
It's a political statement. It's not an economic
well, that's right.
statement, right?
That's exactly right. That's exactly right. And these people, I mean, you've seen my speeches, what I've said. I don't have much respect for these people.
Yeah.
The ECB, Lawrence, they finally woken up to the inflationary reality. Do you think that it was all planned? Like, they're not stupid, right? They know what's going on.
Yeah, I mean, I think they do. I haven't seen their most recent comments. I did tweet it the other day, though. I found it very interesting that the Bild, which is a large tabloid in Germany, called Lagarde Madam Inflation, and which, oh, that's good. I mean, people are waking up, right?
They called her Madam Inflation.
Yeah, I mean, so the central banks, I mean, I will say even the Fed has said, hey, maybe this inflation is not transitory, and Powell said he was a little bit surprised that it's larger than he thought. So at least they've been somewhat honest about what they're observing. I don't know that they, and they claim until recently they claimed they had tools to deal with the inflation. Are they able to? I don't know. I personally don't believe they are, but maybe they've got some secret tool that I'm not aware of.
The European Central Bank, their problem is obviously Greece, Italy, Spain, Portugal, some of these countries that have massive, they're buying all their sovereign debt bonds and they're artificially keeping their interest rates below 1% or, right near zero. If the real market was, if the ECB were not doing that, if they tapered, I mean, Italian sovereign debt interest rates would skyrocket to 7-10%, right? I mean, and then they have their
I would think so. I mean, the problem with all these bond markets is they're not real markets anymore. They're policy tools of these central banks. And so, they've obviously, I mean, they're in the process of what I like to say is they're in the process of breaking the money. I mean, the money is kind of broken.
Mm-hmm.
If you don't have a real interest rate based on supply and demand for capital, well, then, we're the Politburo setting the price of grain, right? I mean, and guess what? I mean, when that happened, they either had too much grain or not enough grain, depending on where they set the price. And that's what's going on in the money. And that's why we've got the inflation. And that's why, I mean, one of the things I find very interesting, I'm sure you all have seen it, it's just the way, every week we get some new thing that gets in short supply and it goes up 300 or 400%. You know, I mean, whether it's British natural gas or I don't know, I'm sure you guys can think of some other examples.
Uranium.
Uranium. I can't remember the most recent ones. There was one last week that actually William Middlecote just tweeted out. But you know, it's and that's a function of the money being broken. You know, that nobody really knows the accurate price of anything. You know, because it priced in the currencies that, you know, everyone's beginning to really doubt. And so, you know, what's going to happen here, guys, in my opinion, is more and more people are going to wake up. You know, I mean, Gresham's law, you all know what that is, right? I mean, Gresham's law is going to take
money chases out bad money or something.
Yeah, exactly. And so Gresham's law is just it's going to punish these people. I mean, you know, people are going to realize I mean, the general populace of the world is going to realize that these monies are going bad. And so they're going to seek to exchange whatever money they have for, you know, gold, silver, Bitcoin, or goods and services. I mean, you know, I had a tweet that I put out this morning where a friend of mine, his wife was at Costco and she saw all the employees loading up on all kinds of things. They had their baskets all full of toilet paper and everything else. And she said, "What are you doing?" And they said, "Well, we know about the price increases that are coming next week. And so we're trying to beat them."
Yeah.
And that's what happens in inflation, right? That's what happened in Weimar, Germany. People would get paid and they would rush to spend the money before the money would buy them less because they knew prices would be higher the next day. And the end point of that is nobody literally wants the money. The money is worthless because no one trusts it. I mean, everyone trusts the dollar because they know what a dollar is and they trust the US government and they believe that they can spend it and, you know, they get paid in those terms and they can exchange it for some goods and services. Now, that will change, right? I mean, if that dollar is depreciating very, very quickly, you know, anyone who has dollars is going to say, "Get me out of here," you know, because I mean, one thing people do is, I mean, they look after their own self-preservation, and so, and this is clearly a case of, you know, he who sells first sells best. I mean, you know, if you're in the theater and there's a fire and the exits are going to get crowded, I mean, you want to get out first, right?
Yeah.
And that's kind of what we got going on. It might be when we, you know, it's still at the early stages and the smoke is only, you know, being smelled by a small portion, not a small portion, but there's some part of the population that smells it. I mean, obviously these employees at Costco smelled it, right? And they're like, "Hey, we know we're getting a cost increase next week. Let's buy this shit now while it's cheaper." And that's going to happen more and more and more. And the end point of that is the currency is worthless. And one might say, well, in favor of what? Oh, okay, pretty easy. Gold, silver, Bitcoin.
Do you see a rush to other hard assets? I mean,
I do. I mean, I think
real estate seems to be going crazy, right?
Well, I thought you were going to go there. Yeah, I definitely do. I mean, so to me, Hugo Stinnes was a guy in Germany who borrowed a ton of money and bought real assets in front of the Weimar collapse. He was very smart. He became one of the richest men in the world. And I think that the American consumers are kind of putting on the Hugo Stinnes trade with their houses. And so, housing has some advantages, right? You can use it, you can live in it. Everyone needs one. And, it doesn't fall apart instantly. It does require taxes and maintenance, but all the same, it's a real asset compared to a dollar. And, as we've seen, I mean, we've never seen US housing rates go up, prices go up as fast as they have in the past year. I mean, 1 month was 23%, the next month was 18 or 19%. Mm-hmm. And to me, what that is that's the American consumer not being, the smart American consumer saying, the government's going to help me to borrow at 3% for 30 years. And I get to buy an asset that's going up. Well, it used to go up at 5 or 10% a year, but now it's going up 20% a year. That's a good trade, right? Mm-hmm. As long as I know I can make those payments, I'm buying a solid asset on a levered basis. And so yeah, that's Gresham's law as well. Don't give me the cash, don't give me the savings. Let me make that cash into a down payment. Let me buy us. Oh, and by the way, I get to borrow money cheaply to buy it. Wow, that's really good.
Yeah. I mean, and so does BlackRock at an even cheaper.
Well, that's right. Well, that's the problem. I mean, that's the bad news. You got to compete with BlackRock and all the private equity guys who are also trying to buy those houses. I mean, it's really amazing to me. I mean, I have some friends around here who are trying to buy houses. I mean, they're in situations where there are 8 or 9 bidders on a house.
What?
Oh yeah, absolutely. This is in the Boston area. and where they're doing 2 rounds of bidding, put in your best offer. And of course, they get rid of 5 bidders who are too low. And they say, well, you're not even in the running unless you're above this. And then they go to the other, bidders and say, okay, now we're in round 2. What's your last best? You're seeing some houses that are, listed for 900, selling for $1.3 million.
Yeah.
It's not uncommon.
Well, my wife and I have had that conversation about our own house. It's gone up probably 40 or 50% in the 2.5 years since we bought it.
Wow.
And we're like, should we? But it's like, what's the point of selling? Because then you got to go buy some overinflated thing somewhere else. I mean, so might as well just sit tight and save the transaction cost, right?
Right.
So,
Lawrence, we want to say thank you so much. We appreciate you for coming down to Wall Street Silver. It's been a pleasure.
Yeah.
Well, absolutely. It's always great to be with you guys. I see Jim at all the shows, and I know you guys are doing fabulous work. So, I mean, I think spreading the word on this issue is that's what I'm all about. I mean, I'm making a lot of noise on it, but I want people to protect themselves, and because when the whole thing does collapse, those of us who have sound money are going to have to rebuild it. And I want to get as many people in the sound money camp as possible, because it increases the odds that we rebuild it in the right way.
Well, let's talk again in the next 3 months or so as things.
Happy to do it anytime. Just give me a heads up and we'll definitely do it, Jim. Thank you.
Sounds good.